Today, mortgage rates dropped below 6% for the first time since 2022, giving people who want to buy a house a better shot at doing that. Joining me to help make sense of what this means is Norm Miller, a real estate professor emeritus at the University of San Diego. So, Professor, why is going below 6% kind of a big deal?
Well, it's mostly symbolic, but it is certainly a positive trend in the last month to see them drop. And in the last year, to see them drop about 75 basis points. So we're making progress. I guess it's symbolic to some people that we had 5, 9, 8.
They seem like small numbers, but when you're trying to buy a house, how much can a small percentage drop actually save San Diegans?
Well, we're talking about a modest amount of savings in the last month, although in the last year we're talking about 15% reduction in mortgage payments. So it is significant. And of course, some people are waiting to see whether they'll drop more. And others are saying, well, they're under 6. That might be about as good as it gets. I'm going to go ahead and jump in.
And of course, over the life of a 30-year mortgage, that can really add up. Do you think the rates are going to continue to go down? And what type of impact could that have on the San Diego housing market?
Well, if we backtrack and ask why they've dropped, there's two factors in the last month. One is that the 10-year Treasury has dropped a little bit. And the 30 years are not perfectly correlated with the 10-year Treasury, but they do tend to move down and up somewhat with the 10-year Treasury. The second factor is the GSEs, that is Fannie Mae, Freddie Mac, have been buying up $200 billion of mortgages and driving the rates down. Now, whether that will continue, I don't know, but that is the primary reason why the rates have started to drop. And so whether they'll continue to drop will depend on the inflation outlook, the 10-year bonds, but there's no clear indication that we're going to continue to drop much below where we are right now.
Professor Norm Miller with the University of San Diego, thank you for joining us.
Thank you.